Hello all, welcome to KM channel. In this video we are going to do SY SEM 3 cost accounting cost sheet multiple choice questions. Okay, so let us start with this one. The first question on the cost sheet is, which of the following item is not included in the preparation of cost sheet? The options are: first option carriage inward, purchase returns, sales commission, and interest paid. The answer will be what? Interest paid. Next one, which of the following items is not excluded while preparing a cost sheet? The options are: first one, goodwill written off; B1, provision for taxation; C1, property tax on factory building; D1, transfer to reserves. The right answer will be option number C, that is property tax on factory building. Next one, which of the following are direct expenses? First, the cost of special designs, drawing or layouts. Second one, the hire of tools or equipment for a particular job. Third one, salesman wages. Fourth one, rent, rates and insurance of factory. The options are: first option, that is the first option, the second option, B1, the first one and the third one, C1, first and the fourth, D1, second and the fourth. The right option will be what? A, that is first and the second. The cost of special design, drawing or layout, that is the first one, and the hire of tools or equipment of particular job. These both are come under direct expenses. Therefore, the option number A will be the right answer. Next one. A company has to pay 25,000 per unit royalty to the designer of the product which it manufactures and sells. The royalty charge would be classified as: options are: first option, direct expenses; second option, production overheads; third option, administration overheads; D option, selling overheads. The right answer will be direct expenses. Okay. The next one, whenever part of the manufacturing operation is subcontracted, the subcontract charges related to materials shall be. The options are: first one, ignored; B1, treated as cost of materials; C1, treated as work overheads; fourth one, treated as direct expenses. The right option will be what? D1, treated as direct expenses. Next one, research and development costs relating to an existing product. First option shall be treated as capital expenditure. B1 shall be treated as deferred revenue expenditure. Third one shall be treated as direct expenses, and fourth option shall be ignored. The right answer will be C, shall be treated as direct expenses. Next one, which of the following are the prime cost? Direct materials, second direct labor, third one indirect labor, fourth one indirect expenses. The options are given: A option 1 and 2, B 1 and 3, C 2 and 3, D 2 and 4. The prime cost consists of three things. One is direct materials, direct labor and direct expenses. In this case, there are two things given: direct materials and direct labors are the prime cost. Indirect cost will never come under what? Prime cost. Only direct will come. Therefore, the option will be the first option, 1 and 2. Next one. What is prime cost? The options are: total direct cost only, total indirect cost only, total non-production cost. D option, the total production cost. The answer will be the direct cost only. Prime cost, it consists of only direct cost. Therefore, total direct cost only. Option number 1. Next one. Which of the following costs are the part of the prime cost for a manufacturing company. A option, the cost of transporting new materials from the supplier's premises. B option, wages of factory workers engaged in machine maintenance. C option, depreciation of lorries used for deliveries to customers. Fourth option, cost of indirect production materials. The right option will be what? A, cost of transporting raw materials from the supplier premises. Next one, the term prime cost refers to. First option, all manufacturing costs incurred to produce units of output. All manufacturing costs other than direct labor and raw materials. B option, C option, raw material purchase and direct labor cost. D, the raw material used and direct labor cost. The right option will be D, raw material used and direct labor cost. Next one, which of the following is not a component of prime cost? Okay, the options given are direct materials, direct labor, third option direct expenses, fourth option overheads. Okay. The right answer will be overheads. Since direct expenses, direct materials, direct labor comes under the prime cost, which is not the part of prime cost, it is the overheads. The right option will be D. Next one. Overhead consists of all the following except indirect materials, factory utilities, direct labor, indirect labor. The right option will be direct labor. Next one. Recruitment cost. First option shall form part of prime cost. B shall form part of work cost. C shall form part of overheads. And D shall be ignored. The right option will be C shall form of part of overheads. Next one. Cost of goods manufactured will include opening and closing stock for first option raw materials and work in progress only. B option work in progress only. C option raw material only. Fourth option raw material, work in progress and finished goods. The right option is A, raw materials and work in progress only. Okay. Next one. In the cost sheet, income from sale of empty containers used for dispatch of goods produced shall be option added to the cost of production, B1 deducted from cost of production, C1 added to the sales, and last one ignored. The right answer is B, deducted from cost of production. Next one. In cost sheet, abnormal cost, example due to accident shall be. Options are given. First option added to the cost of production. B option deducted from cost of productions. C1 deducted from sales. D option ignored. The right option is what? B, ignored. Next one. Direct materials plus direct labor plus direct expenses equal to first option work cost, second option cost of production, C option cost of sales, and fourth option prime cost. And the right option is what? Prime cost. Next one. Prime cost plus factory overheads equal to first option fixed cost, second option work cost, third option cost of production, D option cost of goods sold. The right answer will be work cost. Next one. Prime cost plus factory overheads plus administration overheads equal to dash. Options are work cost, second option cost of production, C option prime cost, D option cost of sales. The right option will be cost of production. Next one, the total cost minus selling and distribution overheads equal to dash. First option cost of goods sold, Second option, closing stock. Third option, cost of production. Fourth option, net profit. The right answer is cost of production. Next one, the cost of production minus administration overheads equal to dash. Prime cost, first option. Second option, cost of sales. Third option, work cost. Fourth option, work in progress. The right answer will be what? Work cost. Next one, prime cost plus overheads equal to dash. First option, work cost. Second option, total cost. Third option, cost of sales. D option, cost of production. The right answer will be B, total cost. Next one, total cost plus profit equal to dash. Selling price. B, cost of goods sold. C, selling and distribution overheads. D, gross profit. The right answer will be selling price. Selling price equal to total cost plus profit. So right option will be what? A. Next one, prime cost plus overheads equal to dash. First option, work cost. Second option, total cost. C option, total of sales, cost of sales. And B option, cost of production. The right answer is total cost. That is B. Next one, Vinayak Limited furnishes the following information for a period pertaining to products. T. Cost of production for 11,000 units, 44,000 rupees. Selling expenses per unit is 0.4. Sales per unit of product was A option 1.15, second option 1.20, C option 2.6, D 1.60. Let us check the answer. The cost of production is given. Cost of production is given, that is 44,000. And the cost total units is 11,000. Cost per unit is 4. Okay. Closing stock units is given 2,000 and 8,000 is the closing stock value. Selling and distribution is 9,000 units. Therefore, the selling expense will be 3,600. Total cost is 39,600. Units is for 9,000. And the sales is given 54,000. For 9,000, the selling price per unit will be 6. Therefore, the balance profit amount will be 14,400. The total profit per unit will be 1.6. So, what is asked here? What is the profit per unit? The profit per unit is what? 1.6. The right answer will be D, 1.6. Next one. Krish and company used in particular year rupees 3 lakhs of direct materials. The year-end direct materials inventory was 50,000. What is given? Direct material cost is given 3,000. And direct year ending closing stock material is 50,000 more than it was at the beginning of the year. What is beginning? What was the closing stock, opening stock in the beginning? That is not given. But the closing stock is more than 50,000 as compared to the opening stock. Okay. Calculate direct material purchase. Options are given 3 lakhs, B option 2,50,000, C option 2,50,000, fourth option 4 lakhs. Okay. So for that, I think this is the concept. Opening stock is not given. Opening stock is not given. Huh? Opening stock is not given. And purchase is also not given. Closing stock is given in the form of relation with the help of in relation to opening stock. Closing stock is 50,000 more than the opening stock. We assume that opening stock be X. Therefore, the closing stock will be X plus 5,000. X plus what? 5,000, right? And direct material is given 3 lakhs. We need to solve this sum. X plus purchase minus closing stock will be equal to 3 lakhs. The X and X will get cancelled, and therefore 50,000 will be added in 3 lakhs. Therefore, total will be 3 lakh 50,000. That will be what the purchase amount. The right options here will be C, that is 3 lakh 50,000. That's in this video of the cost sheet MCQs. In we'll meet with you new videos on new topic. Till then, subscribe the channels, like and share with your near and dears. Thank you.